Okay, here's our update on precious metals. It is August 8th. It is about 10 p.m. So we've been trading to Monday night. So we've been trading for a few hours in what will become the Tuesday candle. We'll start with gold first. I'll say generally, this is definitely good news for precious metals bulls. There hasn't been a whole lot of that recently. So we'll start with the daily chart of gold. So today is starting day 13. So Tuesday will be day 13. Important to note, and this really applies to really all assets. The CPI print that comes out on Wednesday, so August 10th, 8:30 a.m. will be incredibly important. Tomorrow, so Tuesday, August 9th, is the last trading day before that CPI print. And so if that number comes in hotter than expected, you can expect there are going to be some fireworks. If it comes in lower than expected, I would expect the broader market is going to rally. Unclear what that does to gold. I could see gold rallying as well because it gives the Fed room to sort of ease off on the rate hikes. But definitely building a little bit of a bull flag here, kind of similar to one that we had here. So day 13, we still have our high on day 10, which was August 4th. I suspect that's going to break soon. Again, let's see what the reaction is for the CPI. I think we're just consolidating. I mean, you can see this last 3 days. I mean, this day starting has been consolidation after this relatively big candle here on August 4th, which gave us the high. So we've just been consolidating since that high. And this looks like it was an ICL, which was week 31. If we go to the weekly chart, so we are on week 3 right now. So far, it's an inside week. And this is gold spot, the CFDs, not the futures. Those are trading at a slightly different price right now. And so the high we need to get back above on gold spot is 1794. We're down here at 1785 approximately, so another $10 to get another new weekly high. But this is a very clear, a very clear bottom so far. Now, notice this, right? This looked in real time, right? If I just do this to the chart, this looks like a really powerful candle, and you're like, oh, okay, we got a little bit of a follow through, and then you're like, oh, that's ugly, and it's like, okay, we're going lower. So this could absolutely fizzle out lower, but I suspect we get maybe a test of this area at least, because we dropped for 31 weeks, right? And when we bottomed here, we had this war-fueled rally, and then we had this precipitous decline. In the middle of that, we had this little rally here. So we're going to have to see, not a prognosticator. And thinking about the monthly chart, this is month 80 of the 7 or 8 year cycle. And again, as I keep saying, 7-year cycle would be 84 months. 8-year cycle would be 96 months. So however you split it, we're really late, right? If it's a 7-year cycle, there's only about 4 months left. And these things aren't going to end on a dime by any means. But all that to say, we're really late. So if that is the case, that means we either had our 7 or 8-year cycle low on this month here, so month 79, which would have been July, and we're now in the advancing phase of a new 8-year cycle, or new long-term cycle, just call it, or we're still declining into that major low. The third option is we're going to go up and make a new high because we haven't made the high for the cycle yet, and then we're going to come down and make the low. That seems like the most unlikely option to me, in that this was already our high, August 2020, right? We made a double top, did not make a new high in that war-fueled run-up, missed it by $5, literally. And so, again, either we got an early bottom on month 79, and the first step we need for that is a monthly swing low. So we need to trade above this line, above this high from the candle that marks the low, which is this monthly candle here. Now, this is not lower than all of these lows, but you don't necessarily need it to be the lowest low of the lows. If anything, that's actually a bullish cycle low. So it's possible that this is the resolution of all of this consolidation. I just don't know how likely that is. And if you think the broader market is going to roll over later, you have to imagine that kind of liquidation event is also going to pull down precious metals and other assets. So that's the monthly picture, and that's gold. Now we're going to move over to silver, which actually is starting to really perk up and is possibly the biggest reason to be bullish. And so today we had a new high on day 17 for Monday, and we're now opening on day 18. So like, you see we had this nice big extension higher, and then we consolidated, and now we're not getting a nice push. Again, this is obviously going to be massively impacted by CPI, but at, making a new high on day 17, I mentioned on Twitter, that means we're probably going to get, we're most likely going to get a right translated daily cycle. And so you can imagine this thing is going to have some legs. Finally, time to get a little excited. That does not mean we're going back to, even the top end of this consolidation, like the 26, 27 area. I mean, that's not even the top end. I mean, really the top end is like 30. But that would, a move from here to 30 would obviously be almost a 50% increase, which would be obviously awesome if you get long. I don't know that we're going to see something quite that crazy, but you imagine we'll get a little bit more of a rally than we've seen after this just crazy decline and then another rollover. And if we look at the weekly chart, looking quite bullish. New high on week 4. This is week 4. You can see we had this big move up to make it clear that we had an ICL. Last week we consolidated upper end of the range, as I mentioned in that video. You'll see the link in the description. And now we've made a new high. It's week 4. Last weekly cycle topped out on week 6. The one before that, week 7. The one before that was week 7. But the two before that were actually week 19 and week 20. So is it possible that we're going to get a cycle that has an advancing phase that is longer than 7 weeks? Think about that for a second. The last cycle we had that had an advancing phase that lasted longer than 7 weeks, that cycle ended on March 2021, right? So it's literally been well over a year since we've had a weekly cycle that had a rally that lasted more than 7 weeks. That's pretty incredible, which to me means at some point we're going to get a rally that's going to last more than 7 weeks. It's going to catch people off guard. This may not be the one, right? And the other thing is, just because something lasts for more than 7 weeks doesn't mean we're going to get huge upside in terms of price. Something could last a long time. Something can go a while in time, but not make too much progress in price. So we'll have to see, but that's important context, because that's just a lot of churning, right? It's like, oh, we're rallying. No, we're not. We're rallying. No, we're not. We're rallying. No, we're not. And so it's like, at some point, it's going to be like, we're rallying, and it's going to look like, no, we're not, but it'll be a higher low, and then we kind of take off. A lot of people, every time we get the start of a rally for silver, you'll see people come out of the woodwork on Twitter saying, this is the one. I'd say we need to watch for more evidence. At the very least, what we know is we're getting a weekly cycle advance. So take it for what it is. Place your stops. Like if you're not long right now, 1950 area would be a good, I'd say call it $19 even could be a good area. So I could see us testing this area right here at 26. So that would give you something like a, 4 to 1, 4.5 to 1 risk reward ratio. So still a pretty good trade. And what if we get that move all the way to 30? Then you have, more of like a 7, 8, 9 to 1. You can kind of move your trailing stop from there. The other thing I would call out, incredibly bullish, we have a monthly swing low on the board. That is something to take notice of. Now, it's still early in the month. It could reverse, but that's incredibly important. I called this out in the last video. Really bullish looking candle. That said, we've had bullish looking candles that didn't go anywhere. This looked pretty bullish in real time. We got a little rally out of it even, but then we failed, right? But take it for what it's worth. This candle, this dragonfly thing, had a high at 2036. I mentioned this in the last video. We're now trading at 2060, comfortably above that high. We have a monthly swing low. This is how a major bottom would form, right? In the case of gold, where we did not make a new low for the long-term cycle, silver swept all of these lows. What it didn't quite take out was this low here, interestingly enough, right? We came really close, and that doesn't mean the downside is over, right? We could come back to retest that low, right? We could even see a little bullish action on the monthly, like come up here, for instance, something like that, and then still kind of work our way down and test that low eventually, right? So like we're not out of the woods just because we haven't tested that low yet, but getting this monthly swing low, big deal. And let's see what that looks like on the quarterly chart. Ooh, that could be. Now, this is when you start to think about scenarios, think long term. If it's a big if this is a major bottom, think about what that means for the next quarterly candle. So that's the candle that opens in October to give us our Q4 candle. So if we can have a bullish August, hold a higher low on the weekly chart in the weekly cycle, get another rally going, you could see a world where this quarterly chart gets filled out. Like I imagine we come up here, and then next quarter we get a quarterly swing high, a swing low. So this swing low, that's a monthly swing low right now. If we continue to get that bullish follow through, becomes a quarterly swing low, and then we're off to the races. So similar to this, right? This was a quarterly swing low back for the COVID crash, and we had that nice big upside for 3 quarters from there. Actually, really just 2 quarters, because this is just consolidation. We made that new high. So really important to keep an eye on. And I will also just really quickly, let's just take a look at what the annual chart looks like. So the 12-month chart. So I called this out before in previous videos. We're still below last year's low, and that is 2142. And so you have to imagine we're going to test that at the very least, and maybe even then some. But this could be the start of a powerful reversal. Think about this as a false breakdown on the yearly level, right? So we made a new low. Imagine if we could rally the rest of the year above this high. So that would be breaking out above that $30 zone. That's why you have to think about all of the different angles. If we do test that $30 consolidation zone and we're able to break through it, that would mean making a multi-year high. That would mean breaking this area right here, and we're off to the races to try to test this. I don't know that that's what we're in store. That's what's in store for us. We don't have enough evidence to know that yet, but that's what we're going to be watching for as we start to get cues. We can start to make bigger and bigger bets, thinking about what the stakes might be. And so we'll move on to GDX. And then after that, we'll look at the gold to silver ratio, because I think that's telling us some really important things here. So GDX made a new high on day 10 in the daily cycle. So not super late, still relatively early. Definitely a bearish looking candle. And also I will note, really important, we do have a gap. You'll hear this from many people. Gaps tend to get filled. In my experience, I found that to be true as well. I'm sure someone could run a quant study, actually understand what the real percentage is. But generally, you see the gaps tend to get filled. And this thing gapped from 26, so about a 40-cent gap from 26.30 to 26.72. So we'll want to be mindful that that gap doesn't close. But we're finally showing some signs of life on the daily chart, which is good. This would be week 2 of the weekly cycle. We made another new high. So last week, so just going back, week of July 25th, we had that, potential swing low, but we couldn't make a new high. Next week, we got follow through, although it was a really ugly candle. I mean, this was just crap to trade. I mean, we went up here, then we went all the way down there, and then we just closed out here, just a big nothing burger. Now we're getting a new high here. Have to see how we react to the CPI print. Important to note, we're still a decent amount ways below the 10-period moving average, which is closer to 28 right now, so $1 above us. And so you have to imagine we're going to at least test that, if not make a move above it and start to kind of turn this up a little bit. So does look like there's some upside here. Again, there's been a lot of pain in this space, so hopefully people have managed to have some powder dry. We could still see you could see a world where we get a top on like week 6, maybe even earlier than that. So I wouldn't get too comfortable. And if you look at the monthly chart, We're a long way from making. We need to get to 28.36 to make to above 28.36 to make a monthly swing low similar to what silver has on the board, and so that's what we're watching for. I suspect we're going to get that given that silver has already done it. So that's a good spot that you could maybe take some profits because you might expect that there's going to be some resistance there depending on when you got in, obviously. And I'll also look at the annual chart. In this case, this is actually a bearish outside year. So we made a new high above last year's high at 2022, 2021, and then we just failed lower. Now, here's the thing. It may be that this move is over now, that this washed out, all the longs, and now we're ready to move up. Or it could be that this is just getting started and we're actually going to continue the downside the rest of the year and into next year. So it's a really explosive situation, I'll say, because if we are recovering, then there's obviously a ton of upside and there are going to be a lot of people caught off sides. But if this is a bull trap, this little rally, then that means a trap door is going to open beneath us. So either way, we're going to get a big trending move. It's really just going to be a question of, is that up or is that down? How quickly can we recognize it with enough confidence to actually sort of make a move? And so finally, we're going to look at the gold to silver ratio because I think that's telling us some really important things. So we'll actually start with the annual chart. Now notice it's a big green candle, right? We were just looking at the GDX chart, which is a big red candle on the annual. So 2022 is a big green year. We've made a new high. This is actually a swing low. So 2021 is actually a swing low. However, this is where the details matter, right? If we look at the daily chart, it's very clear that we've now entered a downtrend. So we have this big move down. And again, reminder, this moves higher as silver outperforms gold. So it could be the case that they're both going down at the same time, but silver's going down less. In this case, silver is outperforming gold because they're both going up, but silver is going up faster. So we had this waterfall decline, and then we had this retracement, this counter trend rally, this bear flag, this shooter candle, and then wham, huge downside today. And that's because silver had a really strong day. Gold also had a strong day, but silver was just stronger, which is what we want to see as a bullish sign. So notice this one daily candle took out all of these. That's what you see in a counter trend move. You see these tiny little candles going in the opposite direction of the trend, and then one big candle taking you down. And you see how we had multiple candles in a row? I suspect we're going to get something similar to this. Maybe this is telling us something about what to expect from the inflation print. And if we look at the weekly, also incredibly telling. So we have our little top here, and then we consolidate, and now we're making a new low below these lows here. So we kind of managed to hold this area. Now we're making that new low. I want to see us break below this 85.58 level to really tell me we're going to start the cascade. And that corresponds with some monthly levels. And so if we look at the monthly chart, this is very speculative, but bear with me here. If you imagine a long-term cycle, right? So let's say going and thinking about how gold has 7 or 8 year cycles. Imagine just looking at the price action of this, how we have, rallies, retracements. So let's just go back to a major low that we had, April 2006, right? So we had a rally after that low for 30 months, and then we had a decline for another 30 months. So this cycle lasted 60 months. So basically 5 years. And then out of this major low here, right, it's very noticeable. It's like this is very clear, a huge major low, which in this major low corresponded with the bubble top for silver, where we hit $50. We had this massive move higher, so gold outperformed silver. So we moved higher for almost 60 months, so 59 months. And then we had a decline of about 4 months, so we made our low on month 63. And notice, this thing went for 60 months, the decline lasted 30 months, and the advance lasted 30 months. In this case, it was massively slanted, where the advance lasted way longer than the decline. because silver was in a bear market. I mean, really, precious metals in general were in the crapper, but silver was massively underperforming gold. And then you have this low here, and then we had this run up, right, that culminated in a top that came with the March crash when this thing went to an all-time high, 126. So that's when silver just dropped off a cliff. That's what caused this spike. So that spike came on month 44 of this rally. So, and we didn't talk about this cycle, but this cycle we had a rally of 64 months. This was much longer though. But if we start with this cycle in 2006, again, this major low, which is very obvious, you can see this low is lower than all the ones around it. It sticks out to you, right? So this cycle rallied for 30 months. This cycle rallied for 59. This one has rallied for 44. And then this is where, again, this is all speculative. We're all like, this is price action. This is really reading price action reading price action and trying to add a cycles filter to it to give yourself a sense of like how long rallies last. So we then had a decline where we dropped into a low on month 55, which was January 2021. Actually, is that or February? No. Yeah. So right around January 2021, which actually corresponds with the silver squeeze sort of situation where silver kind of retested that $30 level. So we had this big decline. So silver was, from this peak to this trough, so this month 44 high, silver had a pretty nice move. I mean, silver had that big move after COVID, and then we had that silver squeeze move here. So since that low on month 55, which was February 2021, we have rallied for 17 months. So again, remember, we had that 30-month rally in the mid 2000s that corresponded with the global financial crisis, actually. And then in the later 2000s, in the aughts, we had that 59-month rally. And then the rally that culminated in the COVID crash lasted 44 months. And we've now rallied 17 months. And now the question is it possible that this is actually the top of a longer term cycle and we're going to now begin to make a series of lower lows and lower highs, right? Like you imagine something like that, right? Which would imply, right? Which means by definition, silver would be outperforming gold. Now, again, that could mean they're both going down together and just that silver is doing better than gold. So that this has to be seen in the context of the actual charts themselves. Ratio charts always have to be, viewed in the context of the charts that created them, if you will. But look at this candle, friends. This is clearly a shooter, and we've just made a new low below this month. So what does that make this month? A swing high, right? This month has just become a swing high, potentially on month 17. And let's just say hypothetically we're going to have a 40, 50-month cycle. That would mean a lot of months of decline if we got our top on month 17, and it's only month 18 right now. So that move below 86.82 we want to watch for as we continue to descend lower. That's telling us we're sinking deeper and deeper into the swing high. Very, very exciting stuff. Might be pointing to silver about to sort of take off. Again, must be viewed in the context of the specific charts themselves. But as you're putting the pieces together, this is definitely something I'm going to be watching to, give some clues as to how strong a rally we're going to see in the precious metals. Because we know they are in new weekly cycles. It's now a question of, are those weekly cycles going to be right translated? Are we going to get a 20-week rally for silver? Or is it going to be one of these 6, 7, maybe even 8-week rallies that peters out and makes a lower high? Or I should say, a lower high. That's the real question. And again, I think this is going to be a real clue to that.